Titans, one of our favorite indicators, is showing us that a big move will be coming up soon on the higher time frames. So let's discuss what happened the last time we saw the same scenario happen and much more. Kevart, hit that intro. Let's kick it off with the Crypto Fear and Greed Index. Just a quick note that although the name of this index would suggest that it's generally all crypto, the gauge primarily fluctuates based on the movement of Bitcoin. Today we're at 72, which represents greed. So we're slowly inching our way up to the extreme greed side, which starts at 75. And that's an area that we need to be extra cautious, of course. Now let's move on to a review of the Bitcoin balance on all exchanges. As of today, there is still only 1.73 million Bitcoin available on all exchanges. And this will continue to drop now that we're past the Bitcoin halving, since only about 450 Bitcoins will be able to be mined per day instead of the approximate 900 before the halving. Moving on to the Bitcoin liquidation heat map. Just a quick reminder that this map tracks the short and long position liquidity for Bitcoin in areas that are either light or dark yellow. The yellow areas will either be above or below the current price action, which are the short and long positions respectively. Zooming out to the monthly time frame, we can still see that there is $1.23 billion of leveraged liquidity right below 72K here. And as I keep saying, maybe not today and maybe not tomorrow, but at some point, I would expect a massive short squeeze up to about 72K because Bitcoin always follows the liquidity. Now let's take a quick look at the Bitcoin ETF flow table. Just a quick reminder to anyone new to this table, we're tracking how much Bitcoin the institutions such as BlackRock, Fidelity, ARK Invest, etc. are buying to back their ETFs based on the millions of dollars they're spending per day against how much Bitcoin is being sold by Grayscale in millions of dollars as folks are switching out of the Grayscale Bitcoin and into the ETFs. Yesterday, April 23rd, we had our third consecutive day of positive flow totals, which was only at $31.6 million. Now, generally speaking, these positive flow totals have been fairly low lately, but the outflow by Grayscale has also been fairly low. And this is exactly what you'd expect to see during a price consolidation period because it keeps the Bitcoin price trading within a very narrow range. Guys, this is your reminder that we are only 29 days away from a decision to be made by the SEC for the first Ethereum spot ETF by May 23rd. Don't sleep on Ethereum because you know what happened to Bitcoin leading up to the approval of the spot ETFs back in January. All right, now let's hit the charts. Looking at Bitcoin on the 1 hour time frame, we discussed this ascending triangle pattern earlier this week, which had a breakout target of about 68.2K, which is based on the height of the triangle carried over to the top of the triangle. Now, obviously, we've not hit that target yet, but once we did have the breakout, another pattern has developed over here in the shaded region that we need to discuss next. Okay, so zooming in now to the shaded region on the 1 hour time frame, we can see that a symmetrical triangle is now forming with a downward sloping resistance at the top and a rising trend line on the bottom. And just like the ascending triangle pattern, if you measure the height of the symmetrical triangle and carry it over here, which is just a conservative point where a breakout could potentially occur to the upside, the breakout target would be about 68.3K, which is just about the same as the 68.2K target from the original ascending triangle pattern. But of course, if we get a breakout earlier, the breakout target would be slightly higher since you move this line up a little bit higher on the resistance line here. And obviously, we could always get a breakout to the downside, which would have a potential target of about 64.8K. Switching now to Bitcoin on a daily time frame, the price is still trading within a rectangle just like last week that ranges from about 60.8K to 73.8K. Simply put, the key here is to continue closing the daily candles above 60.8K in order to maintain this consolidation pattern. And finally, zooming out to the 3-day time frame for Bitcoin, we can see that the Bollinger Bands are getting pretty tight around the current price action here. And when you look at the Bollinger Band width indicator below, you can see that we are getting nearly as tight here compared to where this yellow arrow is pointing at, which was back in early February of this year, based on the proximity to this green line. Now take a look at what happened when the Bollinger Bands were this tight back then. The price went up by about 74%. Now we may not go up that high again if we get a breakout to the upside here, but it is worth noting that a Bollinger Band squeeze on this time frame tends to be pretty powerful in terms of breakout potential to either the upside or the downside, of course. Titans, we are your one-stop source for guiding you through this Bitcoin bull run. Please join us as we continue to provide the latest market and technical analysis that are going to give you that edge.